Hello and welcome to the John Ark Show. Today's episode is called Secrets to Raising Your Credit Score. What are the fastest and most effective ways to raise your credit score? We'll show you how to do that and much more. Before we begin, I want to encourage you to subscribe, like, follow, and comment on the show, as well as let you know that the show is sponsored by HollywoodIsCalling.com. It's a company which allows you to purchase live calls with your favorite movie stars. There are more than 100 to choose from, and the calls are $19.95 for a 15-second live call and $29.95 for a 30-second live call. Give it a try. It's great fun to get it yourself or to purchase as a gift for someone you know. HollywoodIsCalling.com. Now let's get started. So let's begin by asking, what is the credit score spectrum? At the low end, you have bad credit, what's known as bad credit. And these are scores from 300 to 629. Scores in this range can make it difficult for you to get credit, as well as leave you with very few options when you need to borrow money. Next, you have fair credit. This is a credit score in the range of 630 to 689. This gives you a few more options, but you'll still likely pay higher interest rates and have a limited choice of credit cards. The next category is the good credit category. These are scores in the 690 to 719 range. These can give you lower interest rates and more choices. At the top of the ratings spectrum is excellent credit. These are scores from 720 and going on up. This gives you access to most reward credit cards, and it lowers your interest rates substantially. So what does the good credit score do for you? Well, let me show you. Most people think that a credit score just impacts how much money you can borrow and at what interest rate they will loan you those funds. But it does more than that. In addition to your interest rates, your credit score will now determine how much of a deposit you have to make when you're taking out new utilities, as well as how much your monthly car insurance bill might be, because that is now linked to your credit score. Better credit means lower monthly car insurance rates. Are you applying for a job that requires a security clearance? Well, guess what? A terrible credit score can prevent you from getting that security clearance. It also determines how much of a down payment you need to make on the purchase of a home or a car. The higher your credit score, the better the terms you'll be offered. If you're thinking about buying a cell phone, by the way, even something as simple as a cell phone, your credit score will determine what your purchasing options are. If you have terrible credit, you're probably going to be forced to purchase a prepaid phone or having to pay cash for a phone. But if you have good credit, then you can apply for the 2-year contract plan, which has some of the lowest monthly payments there are, and qualify for that if the credit is strong enough. Now, if you have credit issues, we're going to show you how to build your credit score as quickly as possible with some tips. The first tip is to check your credit report regularly. If there are any errors on it, then they can be quickly corrected. There are 3 major credit reporting agencies. They're Experian, TransUnion, and Equifax. Each one of these credit reporting agencies generates a credit score for you based on their credit history. That means that everyone actually has 3 credit scores. It's not unusual for there to be mistakes on a person's credit report. So even if you believe your credit doesn't have any problems, it's a good idea to check it regularly. You have the right to obtain a free credit report from all 3 credit reporting agencies once a year. The best place to get a free copy of your credit report is a website called annualcreditreport.com. You can also check your credit through some credit card companies, as well as some banks now. For example, Bank of America, if you have an account with them, they'll allow you to see your credit score whenever you like. This will provide you a snapshot of your credit, as well as let you dig deeper into other factors that are driving your credit score up or down. Fixing and correcting mistakes on your credit report is one of the fastest ways to increase your credit score. Next, there's another method which involves increasing your credit limit. Most of the credit reporting agencies prefer that you keep your debt below 30% of your credit card limit to improve your credit score. So let's say you owe $4,000 on a credit card that has a $10,000 limit. That means you have borrowed 40%, and this could ding your credit in a negative way. To improve your credit score, you have several options. You can pay off another $1,000 of that balance, of that debt balance, and reduce your balance to $3,000, and this will help with your credit score. Alternatively, what you can do is you can call your credit card and ask them to increase your credit limit by $5,000 or $10,000. And in doing so, that will lower your the percentage of your debt of your credit limit that you have borrowed. So, for example, if you raised your credit card to your credit card limit to $15,000, and you still owe them $4,000, then that would mean you would now owe them 26% of your new credit limit, and that would help your credit score. Just the simple act of having your credit limit increased causes your FICO score to improve because it appears like you're borrowing a smaller percentage of your total credit limit, and this makes it appear like you're less desperate than you would be if you had to borrow a larger percentage of your available credit. Next, you want to keep your credit card lines open. If you're trying to improve your credit, then you should know that closing some of your credit cards will make that job more difficult. Closing a credit card means you lose that credit limit from your overall credit utilization. That means you'll get a lower credit score because it now appears as though you're utilizing a higher percentage of your credit limit. Keeping the card open and using it occasionally means that your available credit limit will remain higher, and that means a larger score. The next thing that's very important is paying all your bills on time. Paying your bills on time is a powerful strategy for increasing your score because payment history is the single biggest impact on your credit score. And late payments can stay on your credit score for 7 years. Now, if you miss a payment by 30 days or more, call the creditor immediately. Arrange to pay it off if you can, and ask if the creditor will consider no longer reporting that missed payment to the credit bureaus. Even if the creditor won't do that, it's worth getting current on your account ASAP. Every month an account is marred by delinquencies hurts your score. Fortunately, the impact of a missed payment fades over time. Showing lots of positive credit behavior after a misstep can offset the damage to your card more quickly. Next, you want to consider making multiple payments per month. If possible, try and pay your bill several times a month rather than just once a month. If you can afford it, pay down your bill every 2 weeks rather than once a month. This will lower your credit utilization, and it definitely improves your score. Next, be careful about paying off some debts. If a debt has already been charged off by the creditor, it means they do not expect further payments. If you make a payment on a charged off account, it reactivates that debt and lowers the credit score. This often happens when a collection agency is involved. The next strategy involves paying off maxed out cards. Paying down maxed out cards first is a simple way to improve your score. If your cards are close to being maxed out and you pay them off, then that'll have a greater impact on your score than paying off credit cards that you only have a little bit of debt on. The next strategy involves not applying for a lot of credit cards all at the same time. Apply for new credit cards sparingly. Although it increases your total credit limit, it hurts your score if you apply for too many cards at the same time because it increases the perception that you may be desperate. Next, if you have serious credit challenges, you should consider opening up a secured credit card. If your card is really bad, then opening up a secured credit card can help raise your credit score. This type of card involves depositing money in a checking account and then allowing the payments for that credit card to be made directly out of your checking account so that no payments are being missed. And because you can't miss a payment because it's automated, you'll make all your payments on time and your credit score will improve. So I hope this helps some of you people out there. With that, I want to thank you for watching and tell you that we will talk to you soon.